Hey guys, so in this video I'm going over AUD USD and we're going to talk about entries and exits, same thing, so just a new example. So what we're looking at again is figuring out what time session it is the most volatile in and which days it's moving. So that's something you need to consider. So what we're looking at here is in October. So what's happening is if we go on the larger time frame, we can see that there's a level of liquidity here, and what's ending up happening is the market makers are manipulating price. So price ends up going down, they absorb orders, and then they reverse the market. So what we're going to do is highlight this low. Okay, so realistically, it rejected about 66.7. It closed below, or above. 66.7 close above. So what's happening now is price is coming down to touch that support, and it looks like it's going to reverse. So if we look on higher time frames, we can see that this is a daily level, and we ended up filling this wick over here. So price went below that. So now we have a level right here where price is about to reverse. So looking at the 4-hour time frame, we can see that happening. What we want to do is take an entry to get this thing up. So what I'm kind of expecting is for price to come back down in this area. Like, we need more confirmation before buying it up. So if we turn on the sessions, we can see that this is London, this was Asian, this was London, and then so this is about 3 a.m. and then we'll see if New York can take it to the opposite way. So what that means is basically when London opens, that's when UK is open and they're getting ready to start their day. When New York happens, that's Europe in the afternoon, so they go away, have lunch, whatever, and then New York session pops up and they say, okay, London brought it to this price at 0.667. We don't want it at that price. So what ends up happening is they reverse it to get a better price. So what's happening now is let's just see if it touches support. Okay, so it did. So what ended up happening is it made a rejection here and then a rejection here. So a pin bar rejection. If you didn't have, let's say you weren't ready for that entry, you could take it in this area because it's showing you, it's having a pin bar rejection showing you that it's about to reverse. So pin bars are really good in the sense of off major zones because that usually means that it'll be a reversal. When it's not off a major zone and it makes a pin bar, it doesn't necessarily mean that it's going to keep continuing that direction. So it's really good off major zones. So in this case, we could take an entry right in this area. So again, looking at a round number, we can take it at 66,800. Oops. Okay, and our stop loss would be right below structure just to make sure that it doesn't come down on us again. So 11 pip stop loss, and then this is when New York is starting, okay? So London came in, dropped price, and then New York started and reversed price. So our first target is going to be right here where it rejected, but again, this is minor resistance, but we still want to identify it. And then let's just see what happens. So actually, one thing I want to talk about is swap. Because I never talked about it before. So swap is something where the broker has it in MT4, so MetaTrader 4. So basically, if you hold your trade over a couple days or even one day, they charge you a certain fee. So on AUD USD, for example, if you go to your MT4 and go into quotes, make sure you write this down. So go into quotes, number 2, click on the currency pair and choose details. It'll tell you what swap long and swap short is. For this case, for my broker at least, it's negative 1.51 for swap long and negative negative 1.45. So basically what this means is when you're going long and you're holding it over the day. So for my time zone, the market closes at 4 p.m. Closes every day at 4 p.m. and then it starts a new daily candle. So like I said, each candle represents one day when you're on the daily time frame. So it closes at 4 p.m. for me. So what ends up happening is they will charge you a certain fee when you're holding that trade. So it's not much, but it also depends on what lot size you're using, stuff like that. So that's something you would ask your broker. And when you start trading and see it, like if you're starting on a demo account, you'll see what they're charging you per lot, stuff like that. So you'll be able to see, okay, they're charging me this amount. Sometimes on certain pairs, they're actually in the positive, so you actually make money holding the trade. So it all depends on what currency pair, but again, it's nothing like crazy unless you're using a really, really high lot size. But that's something to consider. So basically what happens is that's when the Asian session comes in. So there's basically less liquidity and higher spread. Okay, so now what I want to do is focus on what's happening here. Okay, so our first target is this little resistance level because what can happen is it contest it and continue down to the low. So that's what we're looking out for. Our next structure will be around this area where it broke. Let me just back this up a bit. Next structure will be around here. Around this area right here. Okay, and then the next one will be here. Okay, so let's just see how it plays out. Okay, so it comes to that area, corrects, starts to break, correction, gets to that resistance level. Okay, so this one, we didn't come close to our entry. It just kept going. It eventually broke and tested and then continued up. So we move our target to this next area. So we have rejection. There's a lot of messy price action happening here, but let's say we take profit at 700, 67,700. Okay, so right in this zone. So we can mentally say, okay, it's coming up to 67.6, 67. This is where my target will be. So let's continue. Structure needs to break in order to... Okay, so what ends up happening is after that, it tries to break out, then fails, test structure, and then continues down back to the support. So once you see that it's turning like this, this is where you can take the counter trend. So we're risking 11 pips to make 90. So that's 1 to 7. Again, AUD USD is really, really slow. It's not a pair that I trade personally, but I just want to show you how it works. So then since this broke below, what we want to do is we can look for a counter trend entry, because from here to here, it's about almost 50 pips. So again, that goes back to your trading plan. Do you want to trade with the trend, or do you want to counter trend and then take another entry for the buy? Like, that's totally up to you. So if 40 pips is worth it, you always have to find out what your risk to reward is. So let's say it does stay below structure and we take a sell at the 650 level, okay, with a stop loss above structure. So let's just put a 10 pip stop loss. And then our first target would be this support, which what ends up happening is it breaks and then fakes out. So this is a 1-to-4 ratio. That's still good, risking 10 pips to make 45. For me personally, I go for more, I want to enter a trade when it makes me minimum 100 pips, but it totally depends on you. So what ends up happening is it starts to fake out, and then this is another buy entry because eventually this level is going to break and it's going to go to the high. But let's just see how this plays out. Okay, so our entry would be around here. So if we break it down to the 30-minute time frame, we can see right here that it failed to break. So then we have a test, and then another, and then we continue. So right in this area, we can take a buy position. So 67, 650. We can put a stop loss right below, and then we have a target up here. Okay, because if you look on the 4-hour, this is a major zone, and then it starts to reverse. Okay, so even having this buy down here from structure, that's 130 pips. Okay, so what ended up happening, we had an impulse correction to this support, tested it, went up, and completely went up to the major zone. Okay, so then let's see what happens next. Comes back down to the support structure, exhausts, and goes all the way up and breaks. Okay, so these are your 3 entries, like right here, 1, 2, and 3, and then price just continues up. So all you have to do is watch how it's reacting at each level. That's it. So you don't need all these lines for everything. It's just, you just need a few. You need the majors, and then you need the structure in between. That's it. Okay. So again, AU takes forever, but it is a good pair when you're first starting out for sure to see how the market is reacting. So if you guys have any questions on this, let me know. But again, with your trading plan, you need to figure out, first, I recommend you following the trend, okay? So once you have experience with and consistency with following the trend, so what that means is only entering buys, not entering sells at the major level. The reason why I enter both is because you can get a good amount of pips. On AU, it's a little bit of, it's 50 to 80 pips between the ranges, but on GJ, for example, it's like 100 pips minimum, so that's worth it for me. But when you're first starting out, you want to pay attention to the following the trend rather than doing buys and sells. So you want to be consistent with that. Once you are consistent, then you can go into counter trend trading and getting it off each zone. Okay, so if you need help with your trading plan at all, please let me know. But again, it takes a lot of practice to figure out what works best for you.